Assalamu alaikum and hello everyone. In today's lecture, we will learn how to prepare cash flows from operating activities under indirect method. So this method starts with net income and adjusts actual cash generated or used by operating activities. In the last lecture, we have discussed direct method where we list specific cash receipts and payments. But this method makes adjustments to net income by adding or subtracting number one, non-cash items, and number two, changes in working capital. This approach is easier to prepare as it uses information readily available from the income statement and balance sheet. So, this method basically used by most of the company because it is easy and most of the information available readily available in the income statement and balance sheet. So more than 97% companies use this method. So here we have, you can see that we have net income. This method start with net income, then we adjust any non-cash expenses, and then adjust any non operating losses or gain, and then we adjust working capital. Working capital mean current assets and current liabilities in it. Then we get cash flows from operating activities. As I have discussed that it is widely used because it is simple as compared to direct method, and it directly links the income statement and balance sheet, and it also provide insight into how non-cash items and changing in working capital affect the cash flows. So here you can see that first of all we adjust any non-operating losses or gain in net income. So what are non-operating losses? These are the losses, for example, these are not directly belongs to the core business operation. These are other than operation, for example loss on the sale of equipment. So this reduce net income but do not represent operating cash flow. That's why we are going to add it back in the net income. Similarly, if there is any non-operating gain, so we will deduct it from the net income because non-operating gain increase net income but do not represent operating cash flows as we are calculating operating cash flows. So on the other side, we have non-cash expenses such as depreciation and amortization. So these expenses reduce net income, but obviously these expenses do not involve any cash outflows. That's why we are adding back to the net income to reflect the actual cash flow. So non-cash expenditures like depreciation and amortization, we will add these to the net income. Then we have working capital, for example changes in current assets. So if there's an increase in current assets, then an increase in current assets means the company has used to purchase like inventory or increase accounts receivable and so on. So any increase in current assets is going to be subtracted from net income, and vice versa for the decrease in current assets. If there's any decrease in current assets, then the decrease in current asset is added in the net income. And whereas current liabilities are concerned, so if there's a increase in current liabilities, so we add it in the net income. Why? Because an increase in current liability means the company has deferred the payment and save their cash or conserve their cash. So this is added to net income because it represents the cash that has not been paid out. And if there's a decrease in current liability, so we will subtract it from the net income, because this means that the company has settled its obligation by using cash. So this should be subtracted from the net income. So here it is the summary of change in working capital, increase and decrease in of current assets and current liabilities, and we are going to do some practice from financial and managerial accounting by Meigs, and it is also commonly known as Williams Haka Bettner, and we are covering chapter 13, and we have a brief exercise 13.2 in front of you. So let's begin. The company had net income of the current year. So net income is given $430,000. Depreciation, total depreciation means it is a non-cash expenditure which is also given. During the year, the company experienced an increase in accounts receivable. So the increase in accounts receivable, that is the change in working capital, or you can say the change in asset is also given, and the increase in accounts payable is also given. So compute the cash provided or used by operating activities under indirect method. So indirect method, as we have discussed, that it starts with net profit. So cash flows from operating activities, and first of all we have net profit or net income, and net income is $430,000. So as all the amount are in dollars, so here we have the dollar sign. Okay, then we add back any you can say non-cash expenditure in the net income. So the adjustments are required. Adjustment to reconcile profit to net cash from operations. So next, what we are going to do, we have a non-cash expenditure, which is depreciation. So we add back depreciation expense, depreciation, or if we have any amortization expense, then we add. So how much depreciation expense is there? Uh, First of all, increase total. Okay. So here we have this problem. A depreciation expense is $67,000. So $67,000 is there. Or what we can do for the presentation purpose, we are going to add all uh, add or subtract all the adjustment in the inner column. So in the inner column we have $67,000 positive. Again, all as these amounts are in dollars, so we show the sign of dollar. And then the next is during the year, the company experienced an increase in accounts receivable. So whenever there is an increase in any asset, as we have discussed, so increase in asset is deducted from the profit. So we deduct any increase in accounts receivables. So how much this increase in accounts receivable? 35,000. So we are going to deduct it. Then there's an increase in accounts payable. So if there's increase in liabilities, this means that the cash is also increased. So we add increase in accounts payable. So the increase in accounts payable is 56,000. So 56,000. So when we add it, the total of these adjustment amounted 88,000. So the total is 88,000. We have $430,000 plus we have $88,000. So the total cash increase is $580,000. So this is the cash flows or cash provided by operating activities. So this is the total cash provided by operating activities, and as contrast from direct method, we started from net income, and when we started from net income and then we adjust the items or different accounts to reconcile the profit from operations. So this is from brief exercise 13.2. Then next is 13.4, and in 13.4 we have net income, which is $666,000. Then there's an increase in accounts receivable and decrease in in inventory, and decrease in accounts payable, and the other accrued expenses payable, increase in payables. So determine the cash provided or used by operating activities. So, like in the previous example, which is 13.2, we are going to do the same thing. We start from net income. So, cash flows from operating activities, and we start from net income. So, net income is, and here we have all the figures in dollar amount. So net income is this one. Then we adjustment to reconcile net income or net profit to net cash from operations. So there isn't any depreciation here. So only the working capital changes in working capital is given. So we start from accounts receivable. There's increase in accounts receivable. So rule is if there's increase in any asset, this means that the cash will be decreased. So we as accounts receivable is increased, so we subtract increase in accounts receivables. So inner column, we have how much increase? 50,000. So we are going to deduct this 50,000 here. Then inventory is decreased. So whenever an asset is decreased, this means that the cash is increased. There's inverse association between cash and current assets. So we add decrease in inventory. So how much? There's a decrease which is 23,000. So we are going to add this 23,000. And then accounts payable is decreased. There's a direct association in cash flows and liabilities. So if accounts payable is decreased, this means that the cash will also be decreased. So we subtract decrease in accounts payable, which is 55,000. So deduct 55,000. Then next we have accrued expenses payable increase. So if there's an increase in liability, this means that the cash will also be increased. So add increase in expenses payable, which is how much? 14,000. So we are going to add this 14,000 minus 68,000. So adjustment to reconcile the profit is minus 68,000. So minus 68,000. So when we add it from in net income, the total cash provided from operating activities are $598,000. So this is the final answer, which is cash provided from operating activities. So that's it from this exercise. We are going to practice one more exercise, which is 13.9. And the data which we have in this exercise, we have net income, and then depreciation is given, then increase in accounts receivable, decrease in inventory, increase in accounts payable, and decrease in accrued expenses. So reconcile the amount of net income in order to calculate cash provided or cash used by operating activities. So we are going to calculate cash flows from operating activities. So first of all, we have net income, the net income which is given. Now we have two columns and the dollar amount. So net income, which is 56,000. Then we add back any depreciation. So depreciation is the first we have adjustments to reconcile profit or income to net cash from operations. So here we have the amounts. We have depreciation expense, first of all. So we add back any non-cash expense, depreciation expense. So depreciation expense is given, which is $12,000. So here we have $12,000. Then increase in accounts receivable. So as I have mentioned that any increase in current assets has inverse association with cash. So whenever there's an increase in current assets, we are going to deduct it. So less increase in accounts receivables. So how much? It is 4,000. So we deduct it. Then inventory is decrease. So we are going to add the decrease in inventory, and which is 6,000. So add this 6,000 from here. And then accounts payable is increased. So liabilities have direct association with cash flow. So as the liability is increased, we are going to add it, increase in accounts payable. So how much? 3,000. So we are going to add this 3,000. And the last adjustment is accrued expenses payable decrease. So as the liabilities are decreased, the cash is also decreased. Decrease in accrued expenses payable. So payable, how much the amount is decreased by 2000. So by 2000. So um, total increase or decrease is 15,000. So it is increase. So that's why it is positive. So total adjustment amount is 15,000. And when we add it, the total amount would be 71,000. So this is your cash provided by operating activities. These are the adjustment. We present it in inner column, and here it is the answer, cash provided by operating activities. So this is the indirect method of calculating cash flows from operation. We have one more exercise, and this one is the detailed one. We have a brief exercise. This one, I think it is, yes, this one. So it is a detailed exercise. You can see income statement items are given and the balance sheet items are given, and we have the start of the year balances is given, and add end of the year balances are given, because this is January 1st. So these are the opening balance, and at December 31st, these are the closing balance. Prepare a partial income statement of cash flows year ended this 2011, showing the computation of cash flows from operating activities under indirect method. So we are going to prepare a partial cash flows. Why it is partial? Because cash flows only from operating activities are given. So we will mention the name of the company. So Keener is the name of the company. Keener Machinery Incorporation. Then what we are going to prepare, statement of cash flows, and here it is partial cash flows, and this is for the year ended 31st December 2011. Okay, and then we have cash flows from um, operating activities, and we are using indirect method. So we have cash flows from operating activities. So the format is, we have discussed, we start from net profit. So net profit, we have net income is, you can see, $385,000. So we have $385,000, and all these amount will be in dollars. So we use the sign of dollars here. We have dollars and this way. So now the proper way of preparing cash flow statement is to represent all those items first who are going to be added in the net income, and then represent all those items which are going to be subtracted. So we will discuss it one by one. Like you see, depreciation, it is going to be added. Amortization, add it. Gain will be subtracted. So we will represent it afterward. Then loss on sale of investment. This is non-operating loss. So this will be added. And then accounts receivable, you can see that there is a decrease in assets. So if there's a decrease in assets, we are going to add it. Then uh, again, decrease in inventory, so also the change in inventory will be added. Then there is a increase in um, prepaid expenses. Prepaid expenses are your current assets. So if the assets are increased, this means that cash will be decreased. And accounts payable, the accounts payable is decreasing. So we are not going to add it. This will be subtracted. Then accrued expenses payable, you can see increase in liability. So if there's increase in liability, this means that this is going to be added in the net income. Whereas the other items like gain on sale and other remaining items, prepaid expenses and accounts payable, all these items will be subtracted from income. So So first of all, we represent all those items that is going to be added. So we have depreciation expenses, depreciation expense. In the inner column, it is 125,000. Here you can see. Then amortization of intangible assets, which is the amount is 40,000. So here we have 40,000. Then loss on sale of investment, which is a non-operating loss, non-operating loss on sale of investments. So the amount is total. Here we have 35,000. So $35,000. Then accounts receivable. There's a change in accounts receivable and decrease decrease in account. So how much decrease? We have 380 opening balance, 380,000, and then $335,000. So total 45,000 decrease in accounts receivable. The next is inventory, and inventory is also decrease. So decrease in inventory, which is, you can see, $575,000 minus $503,000. So total $72,000 is increased, or is you can say it is going to be added in the net income because of decrease in inventory. The last one is accrued expenses payable. So you can see increase in accrued expenses payable. So if there's an increase in liability, if there's a increase in liability, this means that the cash will also be increased. How much? 180,000 minus $155,000. So the total increase would be, here you can see we have total increase, which is, so we represent it in outer column, which is 342,000. So here, this is the way of presentation. We are adding it. So when we add all those adjustments in the net income, we have a subtotal. This is called the subtotal. And then in last, we are going to subtract um, all the remaining adjustments. So we have what we have remaining. We have gain on sale of uh, plant assets. So first of all, we have non-operating gain on sale of plant asset, and the amount is total gain is 90,000. So $90,000. Then we have prepaid expenses. So we have increase in prepaid expenses. How much increase is from 10,000 to 22,000. So 22,000 minus 10,000, the change is 12,000. And in last we have accounts payable, decrease in accounts payable. So decrease in accounts payable. And how much decrease is 180,000 minus 155. No, this is 410,000. $410,000 minus what we are going to deduct, 379,000. So how much total decrease is 133. So we deduct it from the subtotal, which is $133,000. We are going to deduct it. So here we have total. You can see here, this is the presentation, and in last, so this is $594,000. So this is the total cash provided from operating activities. So we can write total cash provided by operating activities. So that's it from this lecture, and we have practiced indirect method. And indirect method, we start from net income, and then we adjust all non-operating gains or loss, and then we also adjust any non-operating expense, non-cash expenses like depreciation and so on, and at last we adjust net working capital changes, like changes in current liabilities, current assets, and so on. So that's it from this lecture. Take care, class.